Hey everyone, welcome back to Corporate Decoder, the place where we unpack financial news. And today we're diving into a big move by Sarepta Therapeutics that has investors buzzing. So Sarepta Therapeutics, a company focused on genetic medicines, has just made a significant financial maneuver. This is a really important report because it tells us about how they're managing their money and planning for the future, especially with their convertible notes. What Sarepta did was offer to exchange some of their older convertible notes for new ones. They're basically swapping debt that was due in 2027 for debt that's due in 2030. This is a common strategy for companies to manage their debt and potentially get better terms. The core of this deal involves around $700 million worth of their old notes being swapped for new notes valued at about $602 million plus. They're giving out a pretty hefty amount of their own stock, nearly 6 million shares and over $123 million in cash. This is a big exchange of value, showing they are really trying to reshape their financial structure. The actual new notes were officially issued on August 28th, backed by an agreement with US Bank Trust Company. They've set a new interest rate of 4.875%, which is quite a bit higher than their old 1.25% rate. These new notes will mature in September 2030. Now, here's where it gets interesting. These new notes can be converted into Sarepta's stock. The conversion price is set at about $60 per share. This is a huge jump from their stock price of around $20 at the time of the deal. That means investors are getting a good deal if the stock price goes up significantly, giving them a roughly 191% incentive to convert. Sarepta has a key option here. They can buy back these new notes starting in September 2028, but only if their stock price has consistently performed really well for at least 20 days within a 30-day window. This is a way for them to potentially get out of paying the full amount if their stock hits certain high marks. It shows they have a lot of confidence in their stock's future performance. Holders of these new notes have several ways they can choose to convert them into stock. Before March 2030, they can do it if the company's stock price stays high for a certain period, or if the note's trading price dips significantly compared to the stock price. This gives them flexibility and protection. They can also convert if Sarepta decides to call the notes for redemption, which means Sarepta wants to buy them back before they mature. There's also a provision for what's called a fundamental change if something big happens with the company, an event that significantly alters its structure or operations. The holders can demand that Sarepta buy back their notes at the full principal amount plus any owed interest. On top of the note exchange, Sarepta also sold over 1 million shares of their stock in a private deal at about $18.07 a share. This was priced right at the market value of the day before, and it was to Jaywood Capital Advisors LLC, another piece of their financing strategy. The full details of this entire arrangement, the new notes and the trust agreement, are all laid out in these exhibits. These are the legal blueprints for this financial move. So what does this all mean for Sarepta Therapeutics? Well, this exchange seems like a strategic move to lengthen their debt maturity, push out deadlines, and crucially, they're doing it by issuing stock and cash. This could signal confidence in their future ability to manage their finances and potentially bring in new strategic investors through the stock issuance. The higher interest rate on the new notes means they'll be paying more in interest going forward, but they're getting longer to pay back the principal, and they're using some of their stock to help fund this, which can be a good sign of strong future prospects. The potential issue I see is if the stock doesn't perform as well as anticipated, the higher interest payments could become a burden. But the conversion premium suggests they believe their stock is undervalued right now and has good growth potential. They are essentially betting on themselves. Overall, Sarepta is actively managing its financial obligations and positioning itself for future growth by using these convertible notes and stock issuances. It's a balancing act of debt management and future equity dilution, but the numbers here suggest a calculated move for long-term stability and perhaps ambitious expansion plans. Alright, that's our deep dive into Sarepta's latest financial maneuver. What are your thoughts on this strategy and Sarepta's future prospects? Let us know in the comments below if you found this analysis helpful. Please give this video a thumbs up and subscribe for more content like this. And don't forget to join our Discord community for more exclusive discussions linked in the description below. Thanks for watching, and we'll see you in the next one.